Right, we are now officially recording. Sam, because you asked the question so nicely, what chart or pair would you like me to look at?
EU.
EU.
EJ. No, EJ.
EJ. Okay.
I was going to say, don't give him EU because he stares at that fucker constantly.
I hate EU. Do you know what? I think I'm pretty sure I could draw out the last 2 weeks of price action on EU from memory.
On the 1 minute.
I don't reckon I'd be that wrong. I could definitely do this week on the 1 minute, 100%. 100%.
All right, do it. Do it then, just as a little experiment quickly. Let's do it.
Let me just get... Where's the questions? Right, I got the questions. Okay, cool.
Whilst we're waiting for this other geezer, Yazira or whatever his name is.
Right, so... Where the fuck is my... Hang on, 2 seconds. There you are. Shares a screen.
Very nice.
Okay, cool. You'll see that?
Yeah, man.
Hide floating panel. Right, so... If I remember rightly, I can definitely remember the end of the week. If I remember rightly, we had... I think a big move down Monday. And then we had some like really shitty price action because I remember I was looking for some reversals and we didn't quite get it. I'm pretty sure this was sat at like a daily level. I think this was Monday. Maybe. I think this was Tuesday. And then... Yeah, I do remember. We had a big move up, didn't we? And then we had like a move down like this. And we didn't quite break the lows. And then we had a little point here and a little point here, and we didn't quite break the highs. And then I think Friday we start to reverse. So I'm going to go Monday, Tuesday, Wednesday, Thursday,
I want this to be so wrong.
and then Friday. I remember Friday because I fucking lost my trade. Right, okay. So I'm going to take a little screen.
You want it to be upside down.
yeah.
Right, so I've taken a little screenshot and I'm going to just open that up so we can see it in the background on the video. Alright, so let's make that a little bit smaller. You won't be able to see this. Oh, you can see it. You can see the screenshot, can't you? Yeah. You can see my screen, right? Can you see the screenshot? Or can you not see the screenshot?
No, just one.
Just see your chart so far.
No, 2 seconds. Oh, goo! Right. Hang on. You fucking hide these meeting tools and then you can't fucking get them back. I hate Zoom sometimes. What if I want to stop screen sharing? Am I able to?
Why don't you just open up another chart with EU on it?
Because I want to stop sharing so I can show you. Return to meeting. There we go. Right. Stop share. Share screen. I want to share the actual screen so you can actually see what I'm looking at. Right. Now can you see the screenshot? Yeah.
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 Okay. Right. Monday.
Damn, pretty close.
Yeah,
there wasn't a push down in Monday, admittedly. There wasn't a push down in Monday. So that was Monday.
It's accumulated on Monday and then dropped on Tuesday. It's pretty close though.
Tuesday down
That's
here.
real close.
Yeah, I'll give you that.
I'm pretty happy with that.
I ain't got no memory like that.
Tuesday down there. And then Wednesday was the start of our push up, to be fair. And then Thursday was our pullback. Yeah, Thursday was our pullback. I got the day slightly wrong. And I remember fucking Friday because I was quite interested on Friday. I've just done some analysis on that I think is really worth talking at because I'm looking at Friday now and it's fucking dumb as fuck. And then, yeah. I'm pretty happy with that.
Yeah, well in. I'll give you that one.
That's the beauty of trading one pair, guys. Right. Anyway. Yeah, I'm just going to talk through Euro USD before we get stuck into anything. I'm just going to talk through Euro USD. Because everybody's great. Can anyone tell me why Euro USD, my sells on Euro USD failed?
Well, personally, just looking at the chart on the third sell, the first two were fine, but the third sell wasn't actually confirmed by structure because all it done was test the low and then actually the low held and then you tried to get in.
Yep.
So that would be the only reason I wouldn't have taken it.
Yeah. So for me, what I was doing is, and the thing I fall foul to now more than anything else is trying to be too clever. I got a real good understanding of how charts move. I've got a real good understanding of how Euro USD moves. And, you know, it being a really, really bearish week. Every trade that I'd gotten into, bearish, had won. And, you know, I didn't take much out of these areas, but all of the bearish 15-minute structures, they held really nicely, as you can see. And this is why we say if you've got that bearish momentum, if it's continually making new bearish lows, then you just keep selling into it until you're proven wrong. So what happened for me on Thursday is we had this big bullish push up, okay, which is potentially the start of a new bullish range. Okay, so we can draw that range on, and we can, you know, start considering buys. I, however, wouldn't trade this as a bullish range just yet. Can anyone tell me why? Not Jake?
Need a second break.
Need a second break, Sam. Yeah, exactly. Okay, you need that second break. You need that break here to confirm that we have broken bullish, okay? Because one break is not enough on its own, okay? Simple as that. Ross, you're here.
I know, mate.
How you doing, man?
Is
You
it
good?
working? Is the microphone working?
Yeah, we can hear you fine.
All right,
You're
cool, mate.
fine.
I wasn't sure.
Everyone, welcome Ross,
Cheers,
newest member of the
mate.
Strong Money Forex team.
Welcome, Ross.
Ross is
Cheers, boys.
Zero, and it's not Spanish, but it does mean plasterer in Spanish, which we worked out today, didn't we?
I was
And he is a plasterer as well.
Yeah, unfortunately, yeah.
Yeah.
There we go.
Yeah, being a tradie sucks, bro. I feel you.
Oh, that's it, mate. I work at the golf course through the summer, but obviously that's just seasonal. So
Oh,
back to the
fuck.
plan.
Don't say that, Ross. You won't shut Jake
Hard.
up.
Yeah, you're giving me
Oh
a
my
little
God,
bit of a
you're
hard
both-
on
you're-
right there, Ross.
You're both working the fucking building industry, and you're both golfers. Oh, God.
That's it, mate. Aye, so I
Dread to
did a
think
captain.
what your two DMs are going to be like. Keep it out of the chat. So we need that second break of structure. So this is our initial break of structure, okay, or breaking momentum, okay, and this would be our second break in momentum, or our, you know, true break of structure, however you want to word it, okay. That's the only way that we can really confirm that we are going bullish. Now, I, on Friday, was trying to be a bit clever, okay? All of my sells that week had won. And in this big bullish push here, what happens is, and the reason why that sell on Thursday worked so well, is ultimately because it's an initial push up. The markets, institutions, hedge funds, you know, whoever it is, retail makes a small part of it, they all start piling in buy orders to the marketplace. The algorithm's aware of that, okay? They see that these orders get pushed in, and then it rockets back down the other way. And you can see that you had these huge impulses, and we got, you know, a really nice trade out of it. So all in all, a good trade. Thursday, I basically tried to do the same thing. Now, the big mistake that I made, like Jake correctly said, is we had no new range confirmed. So we can't be selling from internal liquidity areas. We can't be selling from areas like this, okay? We can't be selling from areas like this because they're shit. They're shit areas that have very little weight to it. And other than breaks of structure in the opposite direction, can anyone tell me, other than Jake, can anyone tell me what is a good reversal signal? So you got breaks of structure like this in the opposite direction, okay, so that's a good reversal signal that we might be reversing. What other factors would we be looking at or potentially considering for reversals?
So I'd maybe look at a higher time frame if it's not closing before, closing below.
Yeah, high
Maybe
time
like
frame,
four
that's
foot,
it, not closing
foot,
below. So this section here, okay, that's a giveaway. I look at that now and I kick myself being, what the fuck was I thinking? I tell you what I was thinking. I saw Asia get swept. I saw my setup and I took it. So there was nothing wrong with my trade, okay? It's a perfectly valid trade. But the beauty of professional trading is you become better at filtering out trades. And, you know, everyone's going to make mistakes from time to time. You'll see confluences that you think are worth trading off the back of. But what you've got to remember is that the best trades are the ones that have the most confluences. So this setup was fine. There was nothing wrong with it. In fact, it was a really good setup. The problem with it is it was in the wrong place. If that setup had been... try and find my tool. What tool am I looking for? Where is it? Where is it? What's that little tool called where you can take price? Ah, there we go. Okay. If that setup,
looking back on it, Jake. Sorry to interrupt you. If you were, what time frame is this? I can't see it because that's an eye. 2 seconds.
Yeah. Yeah, go for it.
What's this range here? That orange range?
What do you mean by range? That's the Asian range.
So this blue one's Asia, isn't it, or is this Asia?
That's London.
Oh, that's.
So Asia, London.
Oh, okay. So yeah, so Asia got swept to the downside, and then pushed up.
Yeah.
And then you tried to take the sell.
Mm-hmm. So for me, the way I'm looking at it is this. That to me didn't look like a sweep. That to me did. Then I had a valid setup in there. I had my New York Open trap. So, you know, it started off all right. But the reason why it was reaching higher is it was reaching for more liquidity. And the fact of the matter is this was no longer, at this stage, this was no longer a bearish leg. So we were trading off this kind of bearish momentum, but it wasn't a bearish leg because it failed to make a new low. So, you know, the liquidity that's pushed the market down here has effectively been used up. This entire section has been used up by that leg yesterday. The liquidity that was sat in there that fueled that move has been used, and the buys have turned into sells, the sells have turned into buys. And what it's meant is we then need new liquidity points to push the price down further. Asia clearly wasn't enough, okay? The setup itself was sound. I can see what Jake's trying to say there, you know, that we've swept Asia first and we've pushed the other way. That will often work out that way. Sometimes I will look at just the price action itself, okay? You will often get areas where one side will sweep, then the other side will go, and it won't actually play out the way that you think it will. So that's a good example, okay? So we've swept the one side first, then we've swept that side, then we've pushed up. So, you know, the price action can be really important as well. And ultimately, what I was banking on is the fact that Asia had enough liquidity sat above it to push the market down and break a new low, which when you think about it, when Asia is sat in the middle of a range, there's no liquidity to the left, is obviously unlikely. What might have been a better trade is if we'd taken some of this area out, okay? If we'd taken some of that area out, that might have given us some liquidity, but we're coming towards the end of the day and there's obviously nothing left in here. And the only way that I would consider a sell from here now is if we were to just reject that daily level, okay, which is the high of the range. That is an external liquidity zone here. And get rid of that daily level so you can see it easier. That's an external liquidity zone there. If we were to reject that nicely, then we could potentially get into a setup and go down from there. And that should have the liquidity sat inside of it. That area there should have the liquidity sat inside of it to give us at least an initial push down. It may not get all the way down, but the potential is that it's going to test some of this lower area at least, and then we can get into potentially a further sell, or it might just push higher and we'll go from there, okay? Either way, Euro USD is at a good decision point. I'll be definitely looking at where it's going. For me, this doesn't look like it's finished pushing bearish. If you just look at the overall price action, okay, we've had a massive sweep of buy-side liquidity. We've had a big reversal here, big congestive kind of constrictive move here. Then we've had another push down. We've got another distribution. My expectation for this market is that we're going to be pushing down into some of these lows, maybe taking out that EPA level potentially, or coming down for some of these lower liquidity points before we get the higher reversal. And then we can go from there. Something like that would be my assumption. So I don't think we're done with going bearish yet. I think we've had a nice bearish push, bit of a hesitation. I would be surprised if we reversed from here in the middle of nowhere. We've got far too much liquidity sat in this little section here. So I would firmly believe that we're going to come down and test and possibly take out some of that liquidity just based upon, you know, basic market cycles, buy side to sell side, etc. We've taken out a huge volume of buy side liquidity here, taking out some big highs there, and you know, it makes sense for this area to be next in line of the target. So keep an eye on that. Let's see what Euro USD does and go from there. Any questions on that before we move on to one of the questions?
I'd like to get everyone's input on what they would. Sorry, I'm going to draw on the chart again, so don't move it.
Sorry, just jumping over to the team chat.
Right, so we'll go option 1, option
voice
2,
is not audible.
or
Okay,
option 3. I've asked him to close the Zoom down and reopen it because everyone else can hear check, can't they?
Yeah.
Yeah, so I presume everyone else can hear him, so I think it's just his Zoom. So option 1, option 2, option 3. Option 1 being we take this level and then reverse. Obviously, there would be more intricate price action than that, but we straight reverse. So this is option 1, this is option 2, or we come up higher somewhere up here, or maybe even here, and then reverse. So that's option 3. What do people think is most likely?
Option 1.
1. Possibly 1. I would go for 1.
Most people thinking 1, yeah?
I'm going 1.
Yeah.
You
Could
go
come
1.
up, could maybe come up to somewhere about 109.50.
Somewhere about here, yeah?
Yeah.
Yeah. I would be more inclined to go with option 3 by the fact that this price action hasn't closed below. We've sustained that low. I reckon we're going to be in for a little bit more of a complex pullback, create some more liquidity on the way up, and then take something out up here potentially, and then carry on. That's just my opinion. I don't really know how EU moves because I don't trade that bitch. Me and a poor relationship.
I think, you know, it's one of them, isn't it? I think the way that we trade is, you know, we use these higher time frames to give us an idea of where price might go. At the end of the day, if we get a setup that shows us going bullish, okay, we've got a lot of room to go up there. We'll probably have a bullish week. So if that is the plan, then we just buy up. And, you know, this is
option 3. That might act similar to the question I asked, you know, on the chat.
Oh, was it?
Yeah, well, it kind of leads into that. So if you've got the 1 hour frame and a time frame going to the external and range, which you said was option 3.
Sorry, where did you put these
Sorry.
questions? And I'll just
So question is 15-minute ranges within a 1 hour range. When it's less risky to trade against the momentum within the 15-minute range that's within the 1 hour range, high time range. Doesn't make a lot of sense, Sam. What do you mean? So if you're
I didn't think it did when I
if you're in a 1 hour range, let's try and find some of the price action, see if we can get a
Do you want to share my screen and I'll show you?
Yeah, of course.
Yeah. Share.
All right, go for it.
So can you see this screen now?
Yeah.
So this is the 1 hour range which I was talking about.
Yeah.
So as Jake said then, option 3 would be to come up to here.
Mm-hmm.
Now I would say, as I was saying, this was like the 15-minute range. So as we were saying, option 2, or was it option 1 to sweep that and come down? So if we swept that and kept going, would that be the less riskier trade to trade up to this rather than coming down?
So it's difficult because when you get past that 15-minute high, it depends on it. It really depends on how it reacts. So within the hourly range that you've drawn, all right, I see where you are now. Let me jump back on my screen so I can draw it.
Yeah.
Yeah, I think the external high is the key. If it wicks it and creates an MSU, then we're going to sell. If it breaks and like retests or gives us some kind of a buy pattern, I'd say we go long.
So
the high is key.
The first thing to get right is the range itself. So when you're drawing your ranges, okay, you've got to make sure that they're right to the time frame that you're on. Okay, so I would actually say if we're looking at hourly ranges, we've got that as our hourly range first. And then that's broken by that section. So then this would be the hourly range technically, okay? Because it's this high is the last high that was created before we broke structure, okay? It's cleaner, and this is why I would always jump around time frames, because you only need really need one of them. It's much cleaner on the 4 hour. So that would actually be a 4 hour range that you're looking at, okay? And we've got a couple of areas that are quite key. You've got your EPA here, okay? So your EPA there. So that would be a good place for price to extend to. And then within this range itself, we've got here, which we know is our external liquidity level. Let's just draw these all on, and you've got some range liquidity here. And you know, you've got an internal liquidity point here as well, which is probably worth just keeping an eye on. Okay, so we can mark that one up. Okay, so those would be your 3 kind of extreme liquidity areas that we might be looking for to continue off the back of. Okay, dropping down to the hourly time frame. Hourly time frame is a little bit messy because of this section here. So if I'm looking at my hourly time frame and I'm just looking at trend from here, that is technically a pullback. I don't really like it though, I'll be honest.
Hideous.
Yeah. And then you've got this really mucky price action. I think it gets clearer when you come down to kind of the minute charts. So again, when you've got charts like that that are really mucky, I would hop around until you can see some clear structure, which you can do on the 15 minute. You've got clear structural points here, as you can see. You've got lows being broken, etc. And then obviously we've got this big push up like this. So in answer to your question, where is it? When it's less risky to trade against,
risky to trade against the momentum with 15 minute range?
So you're saying that because we're in a 4 hour bearish range, when would it be less risky to buy inside of that range?
Yeah.
Okay, fine. So you need a confirmed change in momentum. You need that momentum to be broken. At the moment, we've only had one. We've had one push up, which could just be a complex pullback. So that is just an area that could be something. It might not be anything, because what might happen is we might get this external move and then we just get a rejection from it and then further lows. Okay, that's option 1, I think, that Jake drew out.
Yeah.
For us to consider buys, for me to consider buys anyway, there's 2 options that I would look for. I would look for a sweep of external liquidity down here, which we didn't get. So if we'd swept external liquidity, I could have taken a buy from there. We didn't get it, so I'm not interested in buying from it. If this range was the second range, so if this was up here, I would have traded off that, because that would be confirmed range liquidity there. Okay, because I don't know whether we're in a bullish range yet, for me, I'm not going to be trading that, which is why I didn't take any buys. Okay. What I don't like about this is I don't like how corrective it is. It could be for 2 reasons. Could be because the sellers are still very heavily in control and the buyers are not. There's not enough buyers in the marketplace to create impulsive price action, okay, and create momentum. So I'm favoring 1, because I feel like with this price action, although it is Friday, it started on Thursday and it struggled for a day and a half to get back up. So I'm favoring option 1. What I would like to see, if we were to confirm that we're going bullish, is I would like to see some sort of clearance of that external level, and then I will take a trade off the back of something like this, whatever it may be. Get rid of Asia so you can see it.
Yeah, it'd have to take them lows out as well. It'd have to.
Yeah.
Okay. So I want to see something like that. I want to see a confirmed bullish structure. I want to see a second, which that external liquidity changes from external liquidity to a break of structure, okay? Because now we are continuing in our bullish direction. We now have a confirmed bullish range that we can trade off the back of, and then I'm going to hop up a couple of time frames. I'm going to see what looks like clean liquidity points. So for me, I've then got a clean liquidity point here. Okay, let's get rid of some of this stuff so you can see it easier. Okay, we've got a clean liquidity point here, which will be our external. Our range liquidity is quite high up as well. Again, you could argue that these lows are range liquidity. You can draw them on however you want. You know, it's up to you. I mean, you could argue that actually all the lows in discount are range liquidity. I like to use the most obvious low. These are not obvious lows. They're kind of wicky areas of corrective price action. That is an obvious low. That is a clear area that stood out on its own. Therefore, it's likely to have more orders sat around it. So for me, that would be a great trade. I'd take that all day long. I'd be.
And just what what Czech just said there about like the most obvious ones, they're obvious for a reason. It's because that's where the most amount of money was pushed into the market, and clearly they've swept that low. Don't move your chart, Czech. They've swept that low there with this wick, and then they've pushed the price higher. So if they are going to continue higher, then that's the reason that they did it, and that's the most obvious one. So you can ignore all of them as like range liquidity, because you're gonna have to drop down to like the 5 minute chart for them to be standout obvious, you know.
Significant.
And at that point, you could be marking 100 different liquidity points, and then it's just too much.
Yeah, absolutely right. Absolutely right. So the other confusing thing then, and the difficulty that we've got if we are to change bullish on this chart, Sam, is we are then still within. So although we might change momentum on the 15-minute and lower, we're still within a 4-hour bearish range, okay? So we then want to be careful. And, you know, this is personally why I like to trade smaller targets. I'm happy taking 2 hour out of the marketplace and setting the other remaining part of my position to break even, because I know through my own testing is that the market can change. You can change, you know, at any point. So I like to take my 2 hour out, and if I get my second target, then brilliant. But if I don't, then I'm not that fussed. So what we've got to be careful of is that once we do change direction, that doesn't mean until we've broken this clearly and convincingly, that doesn't mean that we have changed bullish, okay? So the key is not panicking and not rushing, okay? If the market isn't clear, sit on your hands and just wait and see what it does. If you can't clearly see where the momentum is, okay, like I should have done on Friday, you sit and wait. You should sit and wait until it gives you a signal. And one of those signals will usually be sat on whatever time frame at the external liquidity. The external liquidity points are always key to our trading, because they will either be swept and then rejected, or they will be broken convincingly. Okay, there's no halfway house. There's no in between. These external liquidity levels are so important to the algorithms and so important to the big institutions that they will either cause an immediate reaction because orders are filled, or they will be broken completely because there's too many buyers in the marketplace in this example, for example. So all we've got to do is we've just got to wait effectively. And this is why, you know, day trading like this, where you're going to use the hourly time frames to give you a kind of a rough direction, and the 15-minute time frames to tell you which direction you should be trading in, then the 1 to 5 minute time frames for your entries, it actually becomes really easy. It becomes really simple. You don't have to worry, you don't have to panic, you don't have to stress, you don't have to rush. All you've got to do is just wait until the market clearly shows you what to do. And if it's not clearly showing you what to do, pretty simple. You just sit and wait until it does. Okay, or maybe that's the time that you look at one of your backup pairs. Okay, so does that answer your question, Sam?
Yeah, that's great.
Yeah, okay, hopefully that's helpful. I've got 7 minutes left, so I can go through the second question, which was from Rick. So what would make you exit a trade? Not what your TPs are, but what would make you close a trade before it reaches the TB? Maybe because of shit price action and how you identify it. Okay, so generally, if I am trading, always, if I am trading, if I've not hit my first target, or if I've not hit stop, then I will not change anything. Okay, I will hold that position until one of those two outcomes occurs, because I've fallen foul to that in the past, where you take a trade, you start thinking, oh god, the price action doesn't look very good, I'm gonna have to come out of the trade, otherwise I'm gonna lose 1R. And then you close it and it fucking rockets to your position and goes like 10, 15, 20R, like the fastest you've ever seen it. So I refuse to do it these days. Okay, I refuse to close before 2R or 1R. There are a couple exceptions to that rule. One is if I'm just before swap. So at 10 o'clock every evening, 10 o'clock UK time, you probably notice, if you are experienced, you know what this is. If you're inexperienced, this will be new to you possibly. You'll notice that the spread's on your broker, okay, and you'll only see this if you are trading on an MT4 or MT5 platform with a connected broker. So if you're physically taking trades, okay, not you won't see it on TradingView. The spread between the bid and the ask, it widens between 10 and 11. It's a low liquidity volume part of the day. It has the most of the big exchanges are closed and the spreads widen because of low volume. When that happens, you can be stopped out of your sell trades easier. Buy trades are left are pretty much fine, but you can be stopped out of the sell trades easier, okay? The reason why I only sell trades and not buy trades is because the way that the spreads work. I think I got that right around, didn't I, Jake? It is sells, not buys.
Yeah.
It is,
Yes.
okay.
Yes. Spread affects sells on your stop loss.
Okay.
For buys, the price actually has to hit your stop loss for you to be out.
Okay. So you've got, I'll show you, right? I'll tell you what, let's use my new tool. Where did it go? Lost it again. Where is it? Have I lost it in like 3 seconds? Come on. Bars pattern, there we go, okay. Right, let's get him up there.
That's so cool. I never know.
Cool, isn't it? Isn't that cool? Okay.
Yeah.
So let's say price is here, okay? You've got your bid line there. I'm not sure that's the right way around. And you've got your ask line here, okay? When spread happens, and let's say my trade is like that, okay, right now. When spread happens at 10 o'clock, your ask line or bid line, whichever way around they are, I don't know, but the top one will widen. And what can happen is, although price is there, and you'll often notice that when spread comes in as well, you'll often notice that price drops down as well. You'll notice that you have like a little spike like that. You have a little spike in price. Okay. So the spread widens like that. And if it widens enough, so if you're using a shitty broker or if you're using like a really exotic pair, if it widens enough, it can take your stop out, okay, even though price is only there. The inverse of that doesn't happen. Okay, the inverse of that doesn't happen. What happens on the inverse, well, is the inverse, okay? So what happens here is you still have that push down like that, okay? Because price will normally, for some reason, you'll see it on your broker, it will normally push down, there'll be like a little spike like that. But what happens ultimately is it widens like that, okay? So you might actually go into a little bit of profit that you're not actually in, except it doesn't really work like that. So you need to be careful at swap hours. That's the first one I'd say, Rick. Okay, you need to be really careful at swap hours and make sure that you're not too close to your stop. Okay, I trade Euro USD, so it doesn't affect me as much. But if I was in USD CHF, for example, it would hit me a lot more. The only other thing
I would just suggest, if you are in a check, can you just put a tool on again, a buy or a sell?
Mm-hmm.
If you are anywhere near your entry point at 9.50, just close the trade.
Yeah.
Don't even fuck around with it. It's not worth it. It's not worth. We all have that mindset as, oh, but what about if it does this and then this? But 9 times out of 10, it will do this and then this and then this, and it's just not worth it. Just either take the tiny little loss, the tiny little win, or the break even, and just be done with it and shut the charts. It's not worth it.
Asia's shit anyway. The only time I'll hold through Asia is if I'm well into profit and my second profit target is on its way. That's the only time.
Of course.
You know,
of course. If you're well in profit, then don't even worry about it. It's not going to affect you.
Yeah.
But if it's near your entry, just close it.
Yeah, 9 out of 10 times you're going to get that stop's going to get hit.
You're going to get
guaranteed.
And the only other thing, Rick, and we've got a minute and a half before you're going to get cut off. The only other thing I would say is this. If I was in a trade like this, okay, and I saw that I was... Hang on, let's think about it. Okay, right. If I was in a trade like that, and my profit target was down here, and I was coming towards the end of my day, and I saw that, and it's like 8, 9, 10 o'clock, that's the only other time I might consider taking profits early, because I'm really close, like, especially when sometimes you like wick and reverse like that. If I see price doing that to me is a reversal signal. I'm like, why is it, if it's creating big reactions here before my profit target, and I'm coming towards the end of the day, What this tells me is that there's resistance there, there's heavy orders there, and we might not get my target. And often what will happen is it'll move back up like this and take you out for break even or take you out for your stop, okay? So the only other time I'll do that, rather than close my trade early, is if ultimately we are very close to my profit target and it's coming toward the end of the day. If this was at lunchtime or before lunch, I would hold it. If it was 3, 4 o'clock in the afternoon, I would probably close it if I saw this sort of price action. And that's it, guys. We're going to get cut off in like any minute now. So thank you for joining us. Appreciate it. This is recorded. It's going to go up in the chat in the next hour or so. And I'll catch you guys in the Discord.
All right.
Cheers.
Cheers, guys. Take it easy.